Hi, Sahil. Good afternoon and good morning to you. How are you?
How are you doing?
Good, good as well. Thank you very much. So we are here today because you have recently hit target on your $30,000 account, Funded Trader Program, and at the moment you are managing your 60K account. You started from 7.5, right? Not too long ago.
About 1.5 month. Yeah.
Good. So in 1.5 months, you managed to double your account already a few times. That's consistency in from where I'm from.
Yes. No, absolutely. I think this is probably the fastest I've reached from 7,500 to 60,000,
Hmm.
which is I think about three doubles. Yeah,
Yep.
three doubles, which is 30%. Yeah, no, definitely. I think over time I've learned that the less trades you place, the better. So I've been not taking those losing trades as much, which has kind of helped me to speed the process a little bit.
Very good. So tell us a little bit more. First of all, are you a full-time trader at the moment? Is it a side income for you?
I'm a full-time trader.
Full-time.
Yeah, I'm currently trading with three different prop firms and then my personal account as well.
Okay,
Yeah, main focus
that's
personal account, but sometimes based on where I'm at in terms of my account, if it's in a drawdown, it's like I take different challenges to keep myself, involved and just to move in the right direction, if you will.
sure. And let me ask you something. Then we will go with your story, but now I just got this question in my mind because you mentioned you have like multiple accounts that you manage, and sometimes if you are in a drawdown in an account, maybe you focus on a different one. Tell me something. Do you trade on different assets? Do you use different strategies, or you have the same approach?
That's actually a very good question. So, when I started, I was trying different things, and
Hmm.
that did involve using different strategies. But what I've come to realize is less is more in every aspect of trading. Meaning, if you place less trades, it's better. If you use less strategies, better. So, for my personal strategy, it's just one strategy, which is not even a strategy. It's basically just a path, which based on the market condition, either we are, if we are trending versus
Hmm.
consolidating, once that's identified, I just need to find an opportunity where the risk is least. Sometimes it doesn't happen. Like right now, I've been trading, well, I only trade gold for the most
Hmm.
part. Like 95% of my trades are on gold, unless I see a larger opportunity on indexes. But yeah, it just depends on what market condition we're in. That's how your TPs are set. Mostly in
Hmm.
consolidation, I keep it really tight with my stop losses and targets. Whereas when we're trending, then I keep my stop losses tight, but I let my winners
Profit
run
run.
a little bit longer. Yes, that's what's happened. I think in one last 1.5 month
Exactly.
is where we've
That's
been
what I
trending a
wanted to
lot, and
say.
yes, we've been trending a lot, and I've just been letting it run to like 5%, 7% per trade, like return, which is not normal. Just to set expectations for everyone, it's not something that happens every now and then. It's you got to be comfortable trading the
Sure.
consolidation markets, which are usually the case for the most part.
Tell me something. Which kind of market would you prefer? Because it's not that easy. It's not that standard as approach. Not everyone has the same question. You have traders who prefer like a trending market, but you also have traders who prefer consolidating markets, depending on the strategy that they use. Which one would you say is best for you and for your approach?
Trending definitely better just because it offers a bigger risk reward. And not to say, I think gotta keep gotta find a balance. So if you're only trading trending market, understand that, if you're not good at it, like some of the breakouts are not going to be breakouts. They're going to come and stop you out. So your winning percentage might go down.
Hmm.
For new traders, that can be such a big challenge because your confidence goes down if, 4 out of 5 trades are hitting your stop loss. But
Sure.
whereas if you're someone who's been consistently profitable, they know even one trade would take care of all those four
Hmm.
losses and get you. So to answer your question, I think trending markets can be tricky, but they're easier to trade. It's just realizing when the trend is done and you're back to like consolidation market, because what tend to happen when I was just trading trending market is the market would start moving in one direction, and then all of a sudden it reaches a point where it's exhausted now and it needs a break, like anything else. I would keep trading it with the same strategy and it doesn't
Mm,
work. It's just realizing which stage we're in. Like right now, for example, on gold, past week we've been consolidating
yeah.
and we're trending for a long time. So realizing that and placing less trades is the way to go.
That's good. And that's interesting as well, because I remember, I think it was a year or so, some time ago anyway, I was just having similar conversation with another one of our traders, and he was actually saying the opposite. He was like, I don't like at all trending market because I like taking my position long and short. So sometimes if the market is not consolidating or if it's trending, it's fooling me in a way that I'm always looking for a reversal. So when you want to see the reversal so bad in a trending market, it's just like you were saying, it can actually be difficult because
Yes,
it
yes.
creates
I
in
think
you a
yeah, for
bias.
100%. I think I agree with that trader, especially with people who just trade consolidation. They don't want breakouts to happen. And with my strategy, what you look for is you basically want the markets to break out
Hmm.
or reverse based on where we're at. So, especially with gold, like I think I would say at least 99, if not 100% of my trades are bullish on gold
Hmm.
because I don't even want to waste my time
Yeah.
when it's consolidating or when it's reversing off the top because it's going to be such a small percentage that I'll make. So I want to capture it at the bottom or at the breakout,
Hmm.
which I think the key to that is realizing what time zones you want to trade
Mm.
because you can't just be trading all day long. Like it needs to be when there is high volume, either that's pre-London, London Open, or New York Open.
Yeah.
So most of my trades are usually just open, like I would open it just at the London Open
Hmm.
or at the New York Open because I know that's when the breakouts would happen. Anytime else, it won't because there's not enough volume in the market, unless there is a news event, which we try and avoid altogether.
100%, 100%. Okay, but let's take one step back because I want to hear the story of how you actually started this business. Because if you are trading full time, it means that you have your own business. So tell me more about that. How did you started? When and the whole story.
Definitely. Well, this was 10 years ago. I was still in school at the time and just wanted something that occurred to me was that I don't want to, work all my life. I just want to be able to have more time for
Mm,
myself, to be able to spend with my family and not just, working 9 to 5 all the time, which is again not a bad thing. It's just something I didn't want to be committed to for a long time.
mm,
And because I wasn't sure at the time if I was going to be happy with my job or what it's going to be like, right? So there's just a lot of uncertainties when I started with trading stocks to start with, and then slowly moved to options a year later. I had no idea what I was doing, but I just, yeah, something I've learned over the years is that the grass is always greener on the other side. So you see Forex, oh, okay, let me try that. This is not working already, but you keep jumping guns or assets when you're especially a new trader or finding that best indicator that'll solve all the problems or like a EA that would, solve all the problems. So that's what I did, at least for first 3 years. I was not profitable, wasn't sure what I was doing, was at least investing in myself. So I was learning, signing up for a lot of trading courses
mm-hmm,
which over the years were great in terms of just understanding the markets, but not really making you a profitable trader. I think the key to profitability really lies in, your mental and just be able to be in a drawdown and being okay with it and
mm-hmm.
then not changing anything that you do. Yeah, once you make that a habit, I think is when you get into a place where you don't even have to think. It's just all subconscious. That's things you got to do, almost like a checklist, right? So yeah, I think about year four is when I started to make some money.
Mm.
At the time, even though risk management was on the plan, but not something that I executed as well. Meaning I would have months when I'm profitable and months when I just blew an account. So you reach that stage where you kind of break even, where you're
Yeah,
making money sometime and other
and you're
times
giving
you
them
don't.
back.
Yes, yes. And that's something I think to this day I struggle with sometimes because when markets are trending, I go a little aggressive with my
Mm-hmm.
approach because I know these are going to be my months, right? So sometimes I'll be taking 2.5% or 3% risk per trade, which I'm not accustomed to or used to using usually consolidating markets, but I've got to accept it. That's why having multiple accounts kind of helps because if I go in a drawdown, I kind of like go in a smaller account and just trade a little bit and get my confidence back and come back and get that out of the drawdown, which I think happened to me on the 30K account, which is
Mm-hmm.
very funny. I hit the 3,000 target, but because of the consistency score, which I think is great, I had to trade
Thank
few
you.
extra days. Yes, because of that, I had to trade few extra days, and I was like, okay, let me just try. And I went like $500 down in drawdown, and all of a sudden the next trade was just a losing trade, and I went all the way down to like I
Mm,
think only down to $500 profit. And then I was like, okay, let's just do what I do, right? So I took a couple of days off and then went back in, and it was yeah, and my consistency score went to like 75%, and I'm like, well,
that's
I was
very
just
good.
doing what I do, so that's how it goes up, right? So yeah, going back to my story. So about 5 years in, when I realized like I think I don't need to work part time. I could do this full time. At the time, I had my personal account that I was trading with. It's actually harder in the personal account, I feel, especially in the beginning when there's no 5%, 10% drawdown limits, which are set to it, which I think is great, especially for new traders to be able to, learn the new rules.
Mm-hmm.
So yeah, when I was able to manage my personal account consistently, it became easier to be able to have an account with prop firms. Not to say I didn't blow prop firms account after that. I definitely did. Because of the 10% threshold, I feel you can get in that kind of a drawdown sometimes in different phases of your trading. So yeah, but yeah, almost 10 years to answer your question that I've been trading. And about year five, year six is when I became full-time
Mm-hmm.
with a part-time job. And then I gave up the part-time job and then I just started trading full-time.
That's good. So, can we say that in the last 3 to 4 years, you gain some sort of consistency within your approach to the market?
Absolutely. I think during COVID is, yeah,
Mm-hmm.
when it actually happened for me. Yes.
That's good. That's
Absolutely.
very good. Tell me a little bit more about the strategy. So I know that you only trade on gold now. Has it always been like that? Or when you started, no, when you started, you mentioned other assets as well, but I'm talking about, for example, our accounts or a different prop firm or different funding providers. This passion with gold is recent or has always been like that?
It's very recent, actually. So gold, I may have started trading about 2 years ago, so not too long ago. Before that, I used to trade only S&P 500,
Mm-hmm.
so just the index fund. The reason for that really was because of my time zone. I'm in
Mm-hmm.
Eastern time
Yeah,
zone, so the New York market opens around when I wake up. Just like really good timing for me. You wake up, trade, maybe look for pre-market open, and then a certain hour the volume's going to come in, which kind of like makes it a little bit easier for my
mm,
strategies, like when the volume is going to come in. So S&P 500 is what I traded for most part of my trading career. Nothing else really. And then gold, the reason I switched to gold was, and at the time I was trading both of them, meaning looking for opportunities. It's just because how trendy the gold is,
mm,
and same for the other, like the
yeah,
S&P 500 or the financial indexes. They're very trendy,
yeah.
so it works great, especially the amount it moves and how well it respects the levels. And I think that might have to do with a lot of traders trading that
Sure.
asset, right?
Sure, sure, sure. So, what is actually the strategy about?
So the ROI on gold, I've found that like my total success rate on gold's better. So
Mm,
win rate is higher on gold versus S&P 500. That's what I realized in the last 2 years, just because I found that it's way more technical on gold, the way it moves.
okay, that's good. Tell me more about this strategy that you use. Do you rely on some sort of particular indicators? We were mentioning levels, so I'm assuming it's more a market structure and price action approach.
Yeah, no indicators. My charts usually just price candles, nothing at all. Yeah, at this point, I think I've become really good at reading candles and what they're
Mm-hmm.
trying to tell you. So Yeah, no indicators. Usually I'll just keep volume sometimes, but that too, I feel like you don't need it because for the fact that you know when the volume is going to come in, especially if you're trading hourly, 4 hour or 30-minute time frames.
Mm-hmm.
They usually just come if you open a volume chart and open daily for gold, you'll see at the certain hour it comes in every day. But yeah, I mean, unless you're doing analysis on a weekend where you're looking at a daily, weekly, or monthly, just preparing for the week to see if you think we're going to be trending
Mm-hmm.
this week or you think we're going to be consolidating, then sometimes I would look at the volume, but no other indicator really. And when I say levels, what I really mean is usually like your higher time frames, highs and lows of the bar. So
Mm-hmm.
like if you're, if you're looking for some sort of a breakout, you might wanna see the candle breaking out the daily high. When it does that, usually it continues to go up. Or if it's breaking the daily low, like it continues to go down. So I would use the higher time frame levels as just like levels to see what might happen. But then I think it needs to align with the volume when the market comes in, as I said, pre-London and New
Mm-hmm.
York. So, meaning if you're at the high of the day, an hour before the London's gonna open, there's only two things that can happen here. Either there is a reversal coming, or it's gonna break out. So if you do a buy stop order a little bit higher, most of the times, if it's gonna break out, you'll get a nice return. But if it doesn't, then you have the stop loss for the
Yeah,
same
sure.
reasons, right? So it's a smaller risk. So yeah, usually just aligning that volume with those levels, meaning where the market's consolidating before that volume's about to come in.
That's good.
Yeah.
That's good. So you do have a top-down analysis approach, but on which time frame you actually place your trades?
Trades are based on 30-minute time frames.
30 minutes.
Yeah, I don't place trades when the 30-minute is still ongoing. So
Mm-hmm.
before I used to do an hourly time frame, I
Mm-hmm.
thought that took a little bit longer for me and I was missing out on trades. Especially when we are breaking out, not of the daily bars, but like the 30 or 1 hour bars. It would take a long time. When you're having an hourly bullish candle, it's usually so big,
Mm.
especially when it's market's moving. And I used to miss that move. So now with the 30-minute close, it's already broken out. You actually capture the other 30 minutes of the breaking out. And usually what I've learned is the candles are usually more volatile during the start and towards the end. So
Mm-hmm.
so I want to capture at least the last 30 minutes. So 30 minutes are, I think, the sweet spot I found in terms of the breakouts as well as in consolidation markets.
That's good. I'm laughing because I also like trade gold. That's the only thing that I focus on when I do have the time to trade. But I also do focus only on gold since too
Yeah.
long to remember now.
Oh,
And
wow.
I also focus on the 30-minute chart. That's why I was just laughing because there are some
Yeah.
similarities, you see. That's good. Tell me something. So 30 minutes, I'm assuming you have an intraday approach. It's rare that you leave position open for longer than, I don't know, a day.
Yes. Yes, never usually. Yeah, usually with my, as I said, with my breakout, it's even though the targets are a little bit higher side, looking
Mm-hmm.
at like capturing 70, 80, 90, 100 pips
Mm,
in this kind of market, in that one trade, which usually if it does break out, it's going to take out so many stop orders in
mm-hmm.
that place that it usually just goes.
Yeah.
So my target is like really to have my orders to buy where I think the stop orders are for sell
Mm-hmm.
and usually have my sell orders where I think the stop losses are for all the buy people. So I kind of keep that in mind based on the market structure, of course. Like if I was shorting for that trader you were mentioning earlier who
Mm.
likes to trade consolidation market and he wants to short like when the market's
Reversals, yeah.
about to break out and I want to know where he would put his stop loss
Yeah.
because when that stop loss gets automated taken out it's going to break out crazy. So usually when that happens pips in like in a second, like in that second it happens so fast. So typically I would take that into consideration and whatever I have a little bit more. So and this works during high volume times, as I said. Other times it doesn't, because I've seen where the price would try and break out around like 11 a.m. Eastern time,
Mm-hmm.
like right
Yeah.
around this time, and it doesn't happen. Like unless there is some news event that happened at 8 something, it usually does not. It usually just consolidates for the rest of the day.
Yeah, I do agree. I do agree on that. Okay. Tell me something. This is not the first account you have with us, isn't it?
Yes. I think the first account I started with Audacity might have been like in 2019.
Ah,
It used to
yes.
be, yeah, 2019, 2020. It used to be a monthly subscription at the time where you just pay, I think it was like 175 pound. But it was great because there were no levels at the time. Like there was no 10%. I mean, there was 10%, but you
Yeah, you
guys were
had
very
to, yeah.
flexible with it. Because I remember when I had my first account with you guys, it was a $15,000 account.
Mm-hmm.
And at the time had gone below 10,000, like 10% drawdown, and you guys were still so supportive of me
Yeah.
to be just keep trading and see if you can pull it out, which I did. Yeah, it's not, yeah, it's been a while with Audacity as well. And
But
that's
that
when I
one
realized
was only on Forex, no gold.
it was only on Forex. Yes, yes. I think that's kind of the reason why I was gone away for some time
Mm,
because that's all I traded. Um, yeah, and at the time, you guys didn't offer gold at the time. Because
that's
which is
good.
kind of like a good approach because it moves a lot, especially for new traders. It can be a lot to
But it can
manage.
also be a lot volatile. So for new traders, it can be, it's a double-edged
Yes.
sword in a way.
Yes, it is absolutely. And it also can have you think that you're good at trading in a
Exactly.
certain phase because it's just moving up. Like you're just buying and it keeps moving up. It's when it start consolidating you realize, oh no, I don't know how to trade. So it just also the perception or just those blind spots that
Hmm.
people may have that, oh, I think I'm hitting my 10% and I think I'm consistently profitable. But now if you've been through the whole phases of the up and down, that's the only way I think you can stay
That's good.
consistent. But yeah, to answer your question, it's been five years roughly. So I've had multiple accounts since
Mhm.
then.
How do you find the new dashboard?
Oh, I think the new dashboard is amazing. As compared to where we were, this is, yeah, it's phenomenal. It lets you, track everything, including your 5%,
Mhm.
10% drawdown limits and the targets. And it tells you the consistency score, which I think is big because most traders don't like that indicator because they want to win on one trade and pass the challenges. But I feel like it's good for them to have that consistency indicator, meaning not to think about the 10% target, but just trying and doing the
Exactly.
same thing consistently. So I think the new dashboard and just the design is phenomenal. It gives you, a graph of your daily drawdown limit, your, maximum drawdown limit, and where you are in equity in live as you place trades, which is great.
That's
Yeah,
good.
no, I love the new dashboard.
That's good. I'm glad to hear
Yeah,
that
I've
because,
also learned that the payouts are faster with the dashboard. Like
yeah,
it took me 2 days to get paid out on the $30,000 account, versus it was a little bit of a process
was a little
because I
longer.
had to send email, had to do, yeah, the KYC. But this is way faster because I have the KYC already done, and all
Yeah.
you do is it comes to your wallet and you just withdraw it to your account.
That's good. That's good. I'm really glad you like that also because it's good that I asked you because you have been with us for the past 5 years. So you actually saw all the changes, all the improvements, and now that we got to this stage, I'm glad we made at least you happy. The idea is to make all the other
Yes.
traders happy as well. So I'm glad that at least with one, I received a feedback straight away that we were doing something good. That's good.
No, this is absolutely moving in the right direction, I think. And yeah, over the years, I've seen everything, having
Mm.
no ability challenge to having ability challenge,
Yeah,
to, having a dashboard and then actually putting a process in place for funded trader FTP accounts. Yeah, no, I think absolutely moving in the right direction, in a good direction.
that's good. So I have two more questions for you. The first one is, your journey with us overall. Let's talk about these now. This recent account that you got. You started with 7.5. You're now on 60K. So with all the improvements, all the new things, and the new features of the Funded Trader program, how was your experience?
I think overall, especially this recent, I think it was great. Just what I really love about the FTP accounts is the scaling.
Mm.
Meaning, even though you're starting small, you could still scale up to like $2 million
Oh
account,
yeah.
which is huge. Which I think any other platform they don't offer that kind of scaling program. Like there was ability challenges where you're just trading the same account and the scaling is very little here. I like that a lot where, I'm just trying to focus on a few trades, and you
Mm-hmm.
hit your 10% and you double and you keep moving up. So yeah, the experience has been phenomenal. And all the things that I wouldn't say did not like, or the time it was taking, because
Mm.
sometimes you're going through a momentum phase in your trading, right? Where you are like getting every trades. Like I think my win rate was like at 90%, which is
Mm-hmm.
not usual. Like it's very unusual because it's just some time it happens because the markets are trending. And I just didn't want to sit on my thumbs for a week waiting for the payout to come through and get the double account, right? So, which got resolved with this new dashboard, I feel. So I think absolutely moving in the right direction. And it's most of the issues have been like in terms of just the timeline, which again, especially if someone's doing it, it takes about that much time because there's so many traders. I completely understand. But just from traders' perspective, I think there was a little bit of time, but which has been taken care of now. So yeah, great experience. I think Audacity is for sure one of the best prop firms out there. Like in terms of just the trust, it's not something I have to worry about, when I buy a challenge, that if I would, get paid, like my payouts.
Yeah.
Once you get that comfortability with a prop firm, I think that's huge. Just that trust, right? So no, absolutely. I think I had a great time trading with Audacity.
That's good. Thank you very much. Really appreciate.
Of
Second question that I want to ask is not for me, but I'm going to use you and your experience to send a message to those that, for example, like yourself, now want to make the switch and, for example, pass from part-time side income to a full-time trading career. What would you recommend to them that are listening to you?
Yes, I think to make that switch, the biggest is the mindset shift. Understanding that, trading is just not trading. It's you got to treat it as a business where there
Hmm.
is cash flow. There is, certain times when you're going to have no business on the day because there's no customers. Other times there's going to be a lot of business because there's going to be a lot of customers. So the same way, once you realize that there is no timeline, there's no target, there's no end goal. This is something you got to do every day. You got to wake up and be a trader, place trades, either they're good or bad, and also not defining the trades as good or bad based on the outcome. It needs to be, if you followed your process, it's a good trade. If you didn't, it's a bad trade. Versus it making a lot of, a 10% trade is not necessarily a good trade. So yeah, really, I think treating it as a business, where you realize that, if you skip a week of no trading, it's going to be good for your mental health. It's going to be good for you to get back on track on when you're back and be able to execute your
Hmm.
process flawlessly. So yeah, to make that, shift from part-time to full-time, I think is really once you take it slow and take less trades, and also understanding, and I think the safest way, especially with these prop firms and you guys, it's so easy to do it because you can get a large account very easily at a very fair price, right? So yeah, just trying to get that consistent income going, slowly, rather than rushing it, rather than, trying to get that $100,000 account, that 10% return in a week, get it in 2 months, because in real world, that's how long it takes if someone
Exactly.
works full time to make, 10 grand. Once you slow it down, it just, most of the problems are usually solved. Like your overtrading usually gets taken care of if you slow it down. You just do one trade a day or two trades max a day. Um, so yeah, I think really treating it as a business and seeing it from a different lens rather than being too focused. I think most of the traders, this problem would be solved if they just take a step back and see it more from a bird's eye view
Of
than
course.
actually in the moment, which I tend to be the issue, and that was the issue for me for the longest time because I was just focusing on the day, or just trying to make that $1,000 or whatever that money amount is on the day, but I think once you, yeah, get the perspective to say, well, if it takes long, it takes long.
Hmm.
It's we're not going anywhere. Having that patience and keying those in. So yeah, just treat it as a business, and yeah, don't get too involved. Just take one trade a day. If it's profitable, great. If it's not, great. And
That's
then come
good.
back again next day. Yeah, that's the best way to do. Especially when you put too many rules, it just complicates
Mm,
it. You keep it simple,
I agree.
and keep
I
coming
agree.
back every day.
I
Yeah.
agree on that. 100%. Just keep it simple. At the end of
Yeah.
the day, the market is just a matter of like choices, and choices are based
Yes.
on people. So
Yes.
keep it simple, and you can't be wrong on that.
Absolutely. Absolutely. Yeah. I think that that's something that happens. People tend to, and everyone, even us, we had to go through that
Of
phase.
course, of course.
Yeah. But yeah, keeping it simple is the way to go. Let's just say that.
Fair enough. Sahil, thank you very much. I really appreciate your time today. And I'm sure that your interview will be beneficial for a lot of our traders and a lot of people that are just now perhaps thinking of getting into this industry. So once again, thank you very much. And once again, congratulations, because seriously, for the last couple of months since you started on the new Funded Trader Program account, we did see a very good level of consistency coming from your side, and we are expecting you to keep up the good work, clearly.
Absolutely. No, thank you. Thank you for having me. Really appreciate you guys, and thanks for setting the standards in the industry. It really helps everyone, like all the traders.
Thank you for noticing that and mentioning it.
Of
Have a good
course.
day.
You as
Bye.
well. Have a good evening. Take care.
Bye
Bye.
bye.